Good morning, folks, and welcome back to Almus Market Mornings. If you're wondering what's up with the US-Iran war, there seems to be a few new updates. Now, one thing was clear, there was an ongoing ceasefire which was broken as some ships were attacked. We covered this in yesterday's podcast, but today we do seem to have some new updates. So, Secretary of State Marco Rubio said the offensive against Iran under Operation Epic Fury has been concluded since objectives of this mission have been achieved. Trump followed by saying that Project Freedom, which is freeing movement of ships via Hormuz, has been paused to see if a final deal with Iran can be reached. So all of this has been a big bolster to the risk sentiment. Oil prices have seen some correction. Asian equities look stronger. Yields have also come off a bit. Good morning, JK. What do you think? Are the stars aligning for some positive sentiment to build up for the rupee? What's your take on this?
Good morning, Swaraj. Yeah, I think yesterday's developments definitely uh, boost to the sentiment. And no, looking at the market reaction, it does appear as if we are moving closer to some sort of a sustainable peace agreement as well. In fact, some reports suggest that the peace plan, which was presented by Iran on Sunday, was quite acceptable to the US side. And hence, the Operation Freedom pausing might have just been, you know, uh, a reaction to that, although it came after a day being in force. So there possibility of a concrete agreement. This is what some reports are suggesting. And if you look at oil price, which has slipped about 5% yesterday, it's also a reflection of the markets sensing that, while US continues to claim having won their objective in Iran, nothing specifically has happened that Iran has stopped attacking or allowing ships to pass through Hormuz Strait. Perhaps there are more points that is being now coming into agreement between the two parties, so that it paves way for the Hormuz Strait to be opened. And then we have to wait and see where the agreements are actually getting aligned. So anyway, it has been at least for now, it is a good development. That's what the markets are reflecting. Stocks went up, then bonds also came up. Dollar got sold a bit, and even in fact, the gold, silver also, which were continuously under pressure for quite some time, they also came up after these news. Now. While we await what's going to happen next, we also see that the foreign minister of Iran is visiting China today, and this is coming just ahead of Trump's the meeting on May 15th, or rather May 16th. And this is possibly leading to some speculation that China may be also helping in these negotiations, and possibly before the summit between Xi and Trump takes place, a peace agreement can be signed. What's all a matter of speculation, and there is no confirmed statement from either Iran or US that that such a final statement, agreement is going to take place. But it is definitely significant that the uh, important leaders of both the countries are going to China at the same point of time. So let's wait and see if this progresses further. In the meantime, we had quite a few data from US economy, particularly on the employment situation. The JOLTS data for March printed job openings at 6.87 million, slightly above expectations, and in line with the recent trends after an upward revision to February. Actually, this is a stable number compared to a lot of uncertainty associated with Iran conflict, tariff concerns, which led firms to delay hiring and investment. So hiring rose to 3.5%, which is the highest level since May 2024. Even the ISM survey, which followed this data, also showed that the employment index was at 48 versus 45.2, although the services index itself was low, slightly lower, and the prices paid were higher, and the new orders were dropping quite a bit. So The survey commentary noted higher petroleum-related costs have not yet been fully passed on to the end products, suggesting that inflation pressures are likely to remain elevated going forward. So the rest of the week, we continue to watch for more employment indicators. ADP payroll report tonight expected at 99,000 versus 62,000 in March. Challenger job cuts was at 60,000 in March. Unit labor cost is seen dropping from 4.4 to 2.6, which means some relief on the labor related inflation. Finally, the non-farm payrolls seen at 60,000 increase versus 178,000 last month. Of course, these numbers continue to be quite volatile. Unemployment rate holding at 4.3%. So interest will surround these numbers for their implications for monetary policy, which is now on hold, with inflation actually, holding up. So also, if you look at the markets, while we are talking a lot about the valuation concerns in US, the S&P 500 companies are on track to post the aggregate earnings of 28% year on year for the first quarter. This is the strongest quarterly profit growth since 2021. This is set to keep the investors' continued interest in US equities. Businesses continuing to invest and consumers continuing to spend despite several macro events augurs well for the largest economy performing. And overall risk sentiment is also definitely supported due to these decisions. If you look at market, dollar of course remains in the range between 98 and 99. Slight weakening tendency on any positive news is seen, but no new low has been broken. That's very significant. But if you look at the two aspects of the market, the Australian dollar, in fact, hit a new 4-year high today at 0.7230. And if you look at the Chinese yuan fixing, this again at the highest level for yuan for the last 3 years. So it's actually at the lowest level of last 3 years, below 6.86. So there is underlying trend of dollar showing weakness, but it's not something which is really a trendy move, but definitely something to take note of. In fact, yesterday, Reserve Bank of Australia stood out from other central banks, hiking rate for the third time in succession by 0.25%, and it was also a hawkish hike, meaning that we could look at more hikes going forward. So we look forward to dollar's trend emerging possibly after this week's jobs data, or perhaps after Kevin was taking over as chairman and hearing his views on the monetary policy. That's what the market is probably looking at. And of course, on the rupee side, we have seen a new high being hit on the dollar. But then since then, it came off initially on the back of some intervention from PSU banks. And later, we also saw some news reports suggesting that RBI is mulling, issuance of foreign currency bonds by state-run banks, including SBI, which could result in good amount of flows of dollar into India. And they're also, giving the swap arrangement for these banks and allowing them to have a hedge for future payment. I don't know how far this is going to work at this current level unless they keep the interest rates quite attractive, and it is definitely going to be a costly affair. And unless, as I said yesterday, unless these measures come along with some good news on the geopolitical side or the global side, it's not probably going to have that much of an effect. And we continue to see capital flows remaining negative even in this week also. Yes, the rupee can correct based on the fact that oil prices are not crossing 120. Anticipation of more measures, possible, and maybe these bond issuances can be coupled with other issues as other measures as well. And no major escalation seen in Middle East, and the selling in Indian equities is somewhat seeing a slowdown as well. For the investor in looking at Indian rupee, it is already weakened 14% exactly from 1 year from 1 year from today. That is from 1st May 2025 till now. We have weakened by about 14%. And this calendar year itself, we have weakened by about 6.5%. Rupee is undervalued by nearly 8%. And well, economy has not been performing badly, and it has weathered many challenges, including the latest one in the Middle East and tiding over all these difficulties. So I think it's time for investors to relook at whether they are getting too bearish on the rupee and too bearish on the Indian assets. So that's what we look at in the coming days, particularly if they react more positively with some positive developments in the Gulf. Thank you.
Thank you, JK. And yeah, so one, of course, the emerging theme is the positive geopolitical development. There is some sort of a sentiment building up that a final deal may be signed sometime soon. So that's the emerging theme, and that is what is driving the sentiment all across. But apart from that, if we look at a few trends, a few interesting trends. On one hand, we have got dollar index, which remains range bound. On other hand, dollar is weakening against the Australian dollar and Chinese yuan. And in fact, Australian dollar hit a four-year high against the USD. And this also comes on the back of Reserve Bank of Australia hiking rate three times in succession. It was also a hawkish hike. And on the other hand, Chinese yuan fixing is at the strongest level against the dollar in the last 3 years. So the underlying trend of dollar is that it is showing some weakness in pockets. Rupee, of course, was again a standout. We hit a new low against the dollar yesterday, but then we strengthened slightly during the day. There are some reports that there could be a possible dollar bond issuances by state-run banks. This may be to receive some dollar inflows, but these measures need to be supported by sustainable flows in other pockets and some positive geopolitical developments. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.